And joining us now is Bob Dahl, Chief Equity Strategist at Nuveen Asset Management. Bob, I'd talk about the markets on any other day with you to start off, but that debate, unbelievable. To call it contentious would be a compliment. To call it embarrassing would be accurate.
The fighting back and forth across the platform, meaning not across the candidates, was just amazing. And you know, I think the formats are tough with that many people and the questions this long. It's just unfair to both sides.
You know what? If you're not up for the job, don't do it then.
Yeah, here.
It was a debate where really the network is being criticized for lack of substance, lack of focus on these candidates' policies and getting their plans out there. And the candidates sure didn't shy away from reacting to that last night.
Here.
No, it's easy. I mean, that's basically a softball. It's very easy to go after the media, and they made it even easier for those candidates to, attack the press. I want to know this though, from now until Election Day, a little more than a year from now, how much does this talk weigh on the markets? Do you start to get a headwind? You have already seen reaction. Hillary Clinton tweets about one company hiking the price of one toxoplasmosis drug.
That's right, and you got a whoosh,
right, and it was a downdraft in a lot of these stocks. Do we expect more of that?
The truth is, Dagen, and you probably know this, markets really don't pay a whole lot of attention to elections till about Labor Day. Before that, it's just so much noise. I mean, the number of people, even on the Republican side, I saw a stat that 70% of the people haven't even started to think about who they're going to vote for. So these are early days for us folk that, get into this stuff. It's circus season, but for the average American, they're not focused on it yet. And no, the markets aren't either.
It's true. If you look at the performance of the markets over various political cycles, right, the configuration of who's in the White House, who's in Congress, it almost doesn't matter. There's not a discernible pattern that if you have this configuration, it might be the most business-friendly thing, but it does not oftentimes translate into market returns. So the economy, bottom line, is what matters.
Bingo.
But I think as we look at the debates and as we get closer to who the final candidate might be, it does matter to certain sectors, right? We just talked about energy policy, so it does matter a great deal what we might do about the export ban or other parts of the energy policies. So the point is, it's on the sector basis, that's where you see the impact from the elections.
Great point. Healthcare was talked about last night a lot as well.
Healthcare, energy, financials. Bob, where are you seeing great opportunities in the U.S. sector-wise right now?
I still think paying attention to domestic earnings makes sense. We're in our 13th quarter where U.S. divisions of U.S. companies have exceeded expectations and the non-U.S. divisions of those very same companies have disappointed. Right. That's because the economy here is okay. It's not great, but it's good enough. And the economy outside the U.S. is generally not great. And then you layer the rising dollar on top of it. And that bifurcation, I think, is very fundamental. Not enough people are paying a lot of attention to it.
So, Bob, how do you advise clients in this environment? Because I agree with you. If you look at anything that is tied to the U.S. consumer, you are seeing stellar earnings, whether it's consumer discretionary, whether it's healthcare. But then, you can allow the multinationals. And if you look at the S&P in general, we're down 1.19% when it comes to this earnings season. So how do you square the two? Can you just invest in the S&P? What do you do?
Yeah, I think you have to differentiate. And the further on you get into a market cycle, the more important stock selection becomes. Early on, the rising tide lifts all boats. Young, vigorous bull markets, the breadth is very strong. As bull markets age and mature, they get a little tired, and not everything goes up. And you've got to differentiate. You've got to own the domestic companies where the earnings are coming out, and you got to be careful how much multinationals you have in the portfolio.
Would you buy into these consumer stocks, though, that are at or near their all-time highs at this point?
Yes, because the earnings are coming through. I'd rather own a company where I have to pay up and the earnings are coming through rather than trying to catch some falling knife of something that's just getting worse.
But that's an interesting point, actually, because what has bounced back the most since the lows that we have seen in August are those falling knives, but were falling knives. So they've had a tremendous rally.
Yes, they have.
So do you think that rally is out of steam at this point, and you do focus back on the earnings fundamentals?
I think those rallies are getting tired. Look at energy stocks in the last few days. After the big run they had off the bottom, they're lagging pretty badly.
All right, Bob Dahl, great to have you this morning. Thank you very much for weighing in on all things markets and election campaigns.